mean, really, this is getting serious now.
Look, we're not in a 2007, 2008 situation. I don't see banks falling over. I don't see some massive systemic collapse on global financial markets. That's the first thing to say. The second thing to say is that there is going to be quite a lot of mortgage pain for quite a lot of people. Let's have a look at a graphic here of where interest rates have been over recent years. Back in 2017, interest rates were all the way down at 0.1% or 0.5%, below 1%, all the way through to the end of 2021. And then you see that staircase of 12 successive rises, Isabel, as inflation surged and the Bank of England tried to respond. But just imagine, from 2017 onwards, if you took out a 5-year or a 3-year or a 2-year fixed-rate mortgage, you were taking out that mortgage at a very low rate. Now, as those rates have unwound, those 5-, 3- and 2-year fixes are expiring by definition. And so you're facing market interest rates which are 2 or 3 times higher than before. And so for a lot of households, particularly people in their 30s and 40s who are stretching themselves just to buy a decent home to raise their families, their mortgage rates, their mortgage payments could double or even triple in some cases. And that's where the pain is going to fall. And a lot of these voters will be in the southeast.
Liam, we hear about the consumer absorbing pain. What about the banks? How much more pain can they absorb?
Well, I don't think the banks are particularly in a weak position, Eamon, and that's my main point here. I don't want to be here on GB News all day today being catastrophist. I think the banks do have some latitude in their balance sheets, and also politically, and also because, you know, we're in the age of social media. Imagine doing repossessions in the age of social media. You get all these people filming their mates in suburbs being chucked out of their homes. It would be corporate public relations disasters. And so I think the banks will show some leniency in a number of ways. Firstly, I think banks will allow people, hopefully at no cost, with minimum bureaucracy, to extend their mortgage loans from 25 years to 35 or 45. If you do that for a while, as rates rise, your monthly payment or the increase in your monthly payment could be contained. I think banks and building societies will, or at least should, maybe under pressure from ministers, again, without bureaucracy, without fuss, allow you to switch easily from a repayment mortgage to an interest-only mortgage for a while, or even allow you no-charge repayment holidays. I don't think interest rates are going to be really high for long. They will come down, and I'm hoping banks and building societies will help ordinary households get through this.
Those solutions aren't without problems, though, are they? I mean, what if you're in your later years and you're trying to extend your mortgage? It's not necessarily going to be great if you're, say, 65 and trying to extend your mortgage by 30 years or something like that.
There will be tough cases, Isabel. I absolutely see that. In that case, that person may have to sell their house. They may have to downsize. I don't see lots and lots of repossessions, what we call distressed buyers, forced exits from households happening. I may be wrong, but that's the way I see it now. I think it's also worth saying that as interest rates go up, there'll be lots of GB News viewers and listeners who perhaps have got some savings. If the banks are showing forbearance with homeowners, they need to show forbearance with savers as well. Let's start passing these interest rate rises on for once.
Yeah.
Whoever got, you know, for years, no one's got any interest on their savings. And that's been a lot of the problem as well. So we'll know at 12 o'clock if the Bank of England, how much it's going to raise interest rates by. It's either going to be a 1/4 point or a 1/2 point. There will be lots of pain, but I don't think it's all doom and gloom.